Hello everyone and welcome back to my channel. Guys, in this video today I'm going to explain to you one of the best options strategy that you can find right now to trade options, especially if you are an option seller like myself. Okay, why? Because guys, you are also able to get these sort of returns as you guys can see here in these pictures. Okay, these are real statements, real trading account from TastyWorks. Remember guys, TastyWorks do not provide demo account. As you guys can see, in 2023 I was able, guys, to make, this is not even like the end of the year last year. At the end of the year, I think I end up like with a 10-15,000 up on this value here, which was roughly $500,000, and this one here was roughly, this one here I think was roughly $25,000. But what I want to show you guys is in these strategies, because this strategy, guys, it's one video, okay, in a series of roughly, I think, 4 or 5, because I want to show you guys the next step, the next step, the next step, how to manage, how to close, and how to do your trade management, which is very simple. Okay, and what I want you guys to pay attention, it's not the $500,000 as you guys can see here, not the $27,000 you guys can see here, because the main thing you should pay attention when you trade options, it is, guys, this symbol here. Okay, the percentage value you are able to take out of the market every single year. Because the thing is, like I always say to you guys, okay, when it comes to trading option, guys, the main thing which you need to pay attention, okay, is like this. Okay, we do not allow ourselves, especially myself, I do not allow to myself to think, you know what, I'm gonna wake up tomorrow when the market open, I'm gonna pull out of the market, let's say 5k. I don't do that, guys, whatsoever. Okay, I do not wake up tomorrow and I say, oh, you know what, I'm gonna pull out of the market tomorrow 10k, for example. Okay, it doesn't happen. I do not think like that, never ever. Why? Because let's say, for example, we have a market like we had in 2021, okay, which was pretty much a bull market. But also we're gonna have, let's say here, for example, in 2022 or 22 to 23, roughly October 2023, we have the bear market. Okay, if you do like this, you did in 2021 here, if you follow the same, let's say, strategy or the same concept in this environment here, selling option, I'm sorry, my friend, you'll be gone. You will be gone. Okay, so what we do is we are always patient, always disciplined. Another thing as well, I want you guys to pay attention. I was going to explain this thing to the very end of this video, but I'm going to explain why now so you guys don't forget. Okay, because if you watch the rest, is because you at least watch this part. Guys, when you're selling this option, when you use this option here, especially for those of you that are beginners, okay, please trade ETFs. I'm not a financial advisor. This video is for education purpose only, but if you are a beginner, your goal it is to break even. If you break even the first 3 months, 6 months, 1 year, 2 years, and 3 years, you are making huge progress, and you are making a lot of money. Your goal as an option seller, especially a beginner, it is not to lose money. If you break even, but you're getting the knowledge how to open a trade, how to close a trade, how to manage a trade, guys, if you get yourself and buy yourself time, you're doing the best thing. And do not use this strategy on stocks. But look at this, Amazon is a blue chip stock, Meta is a blue chip stock. Guys, don't forget, Blockbuster was also a blue chip stock one day. Don't forget about that. Okay, Amazon, a business can come along tomorrow and disrupt Amazon overnight. A business can come along. Look what happened. TikTok did with Meta. Did disrupt Meta? No, but look what the damage that it did. Okay, look what happened with PayPal right now. Okay, I suggest you guys, I know the premium is going to be smaller, but it doesn't matter. Your goal is not to focus on premium. That's why I said to you guys on this, okay, on this thing here that I showed you, okay, all about this, it's not the dollar amount, but instead of the percentage amount that you're going out of the market, going to get out of the market. Okay, so one of the main things that I suggest to all of you, especially for all of you can beginners right now, trade ETF, because it doesn't matter if you're going to get, let's say, out of the markets in the first year 2%, 3%, it doesn't matter. Trade index, Doesn't matter, as long you have enough buying power, that's the best thing to do, okay? Because if you trade this strategy, let's say for example, okay, all the way down here, you're gonna start this strategy. You're gonna explain to you guys in a second, especially for those of you that are beginners. Let's say stock is trading here like PayPal, $100. You're gonna start your system here at $90 here, okay? Strike price. And the thing is, like old people say, oh, trade the wheel strategy, because guess what? When you get a sign here, you can sell calls. Good luck for you, my friend, because guess what? From $90, you go to $85, $80, $75. And if your strike price is all the way up here to $90 and this thing tanked to $50, guess what? You're never going to be able to do the wheel strategy. You're never going to be able to sell call option this thing here. What you're going to do is, you're gonna do what I'll do myself, which I'm going to explain to you maybe in this video or maybe the next one, which is the next step when we get a sign, okay? Because that's the best thing ever, because the worst case scenario, it's a win-win situation, because the worst case scenario, we are going to hold an ETF. And if we do have a bear market like we did in 2023, guess what, guys? Stiff shit. We are going to hold the ETF for the long term. And if you don't have that kind of mentality, you can turn this video off. Why now? Go and watch some whatever that person tell you that you're gonna make 10%, 20, 30, and you can do the wheel, you can do cover call, whatever, all the BS. No, you can't. Because if the stock market tank, you ain't gonna be able to do a covered call. You're going to be forced to hold a stock. So that's what I'm saying. Do not trade stocks. Trade, I don't know, learn to trade futures, trade index, trade ETFs, commodities, whatever. Okay, but you need to be able to understand that at one point, you ain't gonna be able to sell calls anymore. Okay, but I can sell below my base cost. Good luck for you. The market will recover, you get stuck, and you lock in a loss here. Guys, it's just not worth. It's just not worth, okay? Because I'm gonna sell to you guys, I'm gonna give you guys an example what I do with the IWM, okay? But why trade use option for income anyway? Guys, it is the best thing we can do, okay? Because what we're gonna do is, all right, we're gonna sell options and we're gonna put ourselves on the same situation, okay, as the casino or the insurance company, whatever you wanna call it, okay? We are going to sell insurance for those people that want to buy insurance from us, in change of us being obligated to buy the stock for whatever price might be. And I say stock, it can be ETF, whatever. But for those of you that are advanced traders already, you can use stock. There's nothing wrong with that, okay? And of course, what's gonna happen is, on step number one, most of the stocks, okay, is going to expire worthless because we got our strike price here, and then the option expire or out of the money. We're just gonna reset the strategy, and that's it. I'm gonna keep it going over and over and over and again until you get a sign. But basically, the idea for us is to be the casino, or in other words, the insurance company, okay? Very, very, very simple, right? So basically, the step number one, it is to sell a cash secured put options, and that's it, okay? So a cash secured put, it's when you are agreeing, in other words, you are obligated. Remember, guys, we option sellers, we are obligated to buy 100 shares of stock if it reaches a certain price called the strike price, if we do get a sign, which I'm going to explain to you in a second, okay? This is a good idea. Why? Because we can buy stocks below the market price, 10%, 15%. If the stock is trading, let's say, for example, whatever, XYZ is trading, let's say, $100, okay? We can sell here an option with a $90 strike price, which is gonna be pretty much, what, 10% below the market price, and then we're gonna get paid here, let's say, $1 to sell this option roughly. We're gonna get here roughly, I don't know, 11% if we take the $1 out of the strike price. In terms of base cost, it's gonna be $89, so roughly 11% below the current market price of $100, okay? This is very, very crucial, and it is, guys, one of the best strategies out there, okay? But don't forget, the main word here is cash secured put option, okay? You must understand what I'm trying to say, and I'm going to show it to you in a second an example use IWM. But now, for now, just like a paperwork example here, as you guys can see here, if we have a stock, let's say, trading at $192, and we're going to sell here a strike price of $180. Like I said to you guys before in the previous example, in this one here, we're gonna get paid $1.55 to sell the insurance for the option buyers, and the insurance is gonna last for 30 days. Okay, this is what I mean DT. So basically for every option that we sell, in this case we're gonna sell one option, we're gonna be able or obligate to buy 100 shares of IWM. So we must to have $18 in our broke account. This is talking about here, guys, cash account. But of course, like myself, you guys might have portfolio margin, but that's a story for another video. Okay, you need to make sure you have your buying power in place, all your things, because the thing is, if you start to open your legs too much in terms of leverage and buying power, if we do have a massive drop, you can get forced to close your trades. And that's the worst thing ever. Why? Because the thing is, if you sell here more options more than you should, and let's say all the way down here, the markets drop all the way down here, if we're going to turn this cash secure put into long term, which you should anyway, if the market recover, guys, guess what? You're gonna be forced to close your trades down here just to see the market recover and make a lot of money. And as you guys can see here, like I showed you guys before, here, if I was forced to close this trade here because the wrong buying power or the wrong margin, I'll be missing out on all this trade. So what I did was, I went through step number 1, cash secure put, I got assigned, and I transferred this thing here into long-term investing, okay? In this case here, I sold, should I say, some call option in other stocks, but majority of them, especially the ETFs and the index, I hold them, and that's why I made this much money, because my base cost, guys, let's say was here $100, and then I start to do my DCA, lower my basis cost. When the market recovered, I was able to capitalize in all these games, okay? Very, very crucial that you do understand. So basically, like I said to you guys, very, very simple, very, very simple. Let's say, for example, here right now, the IWM, it is trading, as you guys can see here, on the top. Not the top, I don't know if you can see the top bar. Let me see if I can double check. No, you guys can't see, but right now it's trading at roughly $200. So basically what we're gonna do is we're gonna look for something down here to place our strike price, and in 30 days, like I said to you guys in the exam before, if IWM trade above, let's say here we're gonna sell at, let's say, $190, with IWM trading right now at $200. If in 30 days this thing here close above $190.01, this thing is gonna expire worthless, and we're gonna keep all the premium. And if the stock close below here, we're gonna get a sign and we're gonna hold the IWM. And what we're gonna do is we're gonna turn our strategy into the wheel strategy or the covered call. We're gonna start to sell call option against this 100 shares for each contract that we sell, okay? And if IWM start to tank, like here, for example, I sold a put here, then I transfer to the covered call. I sold calls here, then drop even more. I start to do my DCAs, guys, because the thing is, if you get to one point, IWM drop too much, let's say 30%, okay, 50%, I don't want to sell calls anymore. I want to hold all the way down here, because if the market do recover, okay, at least to break even, guess what? My base cost all the way down here, and I hold a lot, plenty of shares here of IWM. I don't want to sell call option at all, especially on index, okay? I want to hold IWM for the long term. Even if I be able to sell calls, I don't want to do that whatsoever, okay? So very, very simple. What we're gonna do is we're gonna come here to our trading platform, whatever platform you might use, TastyWorks, Thinkorswim, whatever, Schwab, Robinhood, whatever. We're gonna pick here. The first thing we're gonna do, we're gonna pick our strike price with our DT. I like to stay, guys, roughly, let's say 45 to 60 days, okay? We don't have 60 here, but you can go between 45 to 60. That's my sweet spot. So in this case here, I'm gonna do 45. As you guys can see, I'm using IWM, and the sweet spot in terms of sell or picking up your strike price, it is in this region here, which I'm going to show to you guys in a second, okay? Let me see if I can delete here. Let me go back here. What I'll do is, guys, I look for a strike price between 12, okay, to 16 deltas, okay? For a couple of reasons, okay? Very, very simple. The first reason, guys, as you guys can see, we are way below here of one STD, okay? We are below one STD. which stands for 1 standard deviation, okay? And if I do a little draw here very quick, remember guys, we have the normal curve or the bell curve, okay? This pretty much here 16%, 16%, is that right? 16. Okay, this is roughly 64%. So basically, in this case here, we're gonna have an 84% chance, if we pick up the delta here of 14, that this option here is going to expire out of the money. In my case here, if I have an 84% of chance to be successful, I'm very, very happy with that. Are we going to make money because we are out of the, or not because we are out of there, but because we have a pop of 90%, 95, 85? No, it doesn't mean anything. But at least we have an idea when we place the trade where our strike price is. I'm gonna show you something quick. So basically, if we pick here, for example, the 16, we're gonna sell this option here. We're gonna collect here $1, and like I said to you guys, we're gonna be roughly 84%, okay? 86, because it was a 14 delta, exactly like I said to you guys, okay? Dead on. So basically, at this time we place the trade, this is what we have. Why now? This thing will change. It doesn't matter. We know that, okay? And we don't care either. Let the pop change to 70, 40. We don't care. Okay, we know. Let's say buying here the theory of passive income doing nothing, or let's say 95% of the time you're gonna win your trades. It doesn't matter. You can win your trades 95%, 98%. You can still lose money. When you sell option, you need one bad trades, and you can wipe out all your profits for the whole year. Okay, and that's what I always say to you guys. Okay, first thing first, when you come to selling option, guys, another trick, another knowledge you need to understand: position size. Because everything that I say in this channel, when it comes to trade options, you can watch every single video that I talk about in this channel. I want you guys to put one thing in your mind. If you do not understand this, you're never going to be a profitable option trader. Okay, it is, guys, position size. I don't care if you've been trading for 10 years, 5 years, or 20 years, 15 years. It doesn't matter. If you put 10 people in a room and ask all of them why they lost a lot of money and was the main cause of losing a lot of money, they have one thing in common: wrong position size. Okay, but anyway, hope you guys appreciate, because if I have someone that had told me that on the very beginning, guess what, guys? Things for me would have been very, very smoothly and way, way more easy. Okay, and by the way, as you guys can see, I do not place advertisement in this video or in my channel. I don't want all those scammers, people selling all that crap shit, day trading, forex crap for you guys. So I do, if you guys want to support the channel, just subscribe to the channel. Would be nice, so you can spread the word and a lot of people can watch this video. Okay, so as you guys can see, we are going to receive $1 for this trade. And if you come here to the curve, very, very simple, guys. So basically what I'm saying to you, in the stage 1 here, we want to collect this $1, okay? And as you guys, I don't know if you can see on the video, it's very, very small, but in 45 days, of course, we're going to close before, we're going to manage the trade. There's plenty of things to going on. But let's say, for example, in 15 days, this option dropped to 15 cents. We're going to make $50, okay? That's fine. We sell 5 contracts. It doesn't matter, 250 or sell 4, 200, whatever you can do, because you might have a smaller trading account. You can do whatever you want, okay? But on stage 2, which I'm gonna show to you guys in the next video, if this thing here trade below, what is gonna happen is we are going to get a sign. That's okay, nothing wrong with that. We are going to hold 100 share for each contract that we sell, and we're going to sell call option here, okay? Like you guys can see here, for example, if we get a sign on 188, we might be able to sell here at the money next time, or we might be able to sell a little bit out of the money. Of course, these numbers here, guys, will change, okay? So you guys can have an idea, but that's what we're going to do. We're gonna hold the shares and sell calls, which basically, guys, is the covered call, okay? And then what's gonna happen is, if the shares eventually do recover, we are going to let the share goes away. We're going to go back to care secure put strategy. But that's the wheel strategy. Of course it is, but with a couple of twists. First, we don't sell on crap shit stocks. Forget about the return. Forget about what I've seen people doing webinars talking about volatility, selling the care secure put, doing the wheel strategy. That's the worst thing ever. You do not look for the premium, guys. You need trading this strategy, because if this thing starts to tank and never recover, you're gonna get wheeled down all your money, all your savings. That's it. You do these things here on ETFs, index, because the thing is, if this thing drop here to 125, we're never going to be able to sell calls here, unless if you go out 6 months, 1 year, 2 years, and you're gonna be very silly to do that, because for the market to recover in 6 months, 1 year, 2 years, it is very possible. What you're gonna do is, if this thing here dropped to 100, which is basically like 50%, what we're gonna do is, I wanna buy some more down here, and I wanna turn this thing here to a long-term investing. So basically, I went from selling cash secure put to eventually covered call to eventually will strategy back to long-term investing. Why? Because everything we do in this channel, we have one thing and one thing in mind: long-term investing. And if you don't have that kind of mentality, guys, you are watching the wrong channel. Go and watch someone else. Go and watch those 40, 30, 50, 100%, doubling the account, all those nonsense. Okay, buying the options out of the money, getting all the GME, MC crap. You are at the wrong channel, okay? This is a long-term investing channel using derivatives, okay? Using derivatives to make money on any price direction. Upside, sideways, downside, bullish, bearish, trend, or whatever. But in the worst case scenarios, you guys can see, if we get this thing here all the way down here to minus 50%, guess what? We are going to hold this product here, in this case IWM, in our portfolio as a long-term investing. Why? I don't want to sell call here. If my base cost is 135, I don't want to sell call here either, because I know if this thing go back, let's say for example, okay, if this thing here, guys, goes back, let's say for example, we are trading here all the way down here, okay? Let me just get my pen right here. For example, if I'm trading, this thing went from 200 all the way down here to 150, okay? And I pretty much got a sign around here, let's say around here. If I drop my base cost to this level and this thing drop a little bit more, I want to buy some more down here, because if I like IWM at $190, guess what? I love IWM at 150. Why not? If I like where it is right now at 5% discount when I'm going to sell my first cash secure put, guess what? I love even more all the way down here at 50-60%. And then I'm going to hold this thing for the long term. If you don't have that kind of mentality, like I said, you are at the wrong channel. Okay, we don't do day trading here, guys. Forget about that. I don't have nothing to offer to you. This is a long-term investing, dividends, all the good stuff, okay? But of course, we use derivatives to get into our long-term investing, right? Guys, very, very simple. So the first step we are going to do, we are going to sell our, okay? Let me go back here. I'm going to sell to you guys. We are going to sell on step 1, okay? We are going to sell our cash secure put, okay? Very, very simple. And then if we do not get a sign, okay, we're gonna reset the strategy. If we do get a sign, we are gonna do is we're gonna sell covered call, okay, which is gonna become a covered call strategy, okay. And what's gonna happen is, if we do not get a sign, we are going to reset if it's possible. Remember, if the markets drop 5, 10, 15, 7, that's fine. If not, if it start to drop a lot, we are going to turn this covered call here into a long-term investing. And we're going to hold this thing here for the long term. So when it comes to this stage here, you must be able, guys, to have good thing on your portfolio. Good ETFs, good index, things like that, okay? Nothing wrong doing stocks, but you must be knowing what you're doing, especially when it comes to position size. Because any business can get interrupted in a matter of a day, in a matter of a week, okay? But in a nutshell, this is what we're going to do. And of course, everything that I say here, take into consideration the 2 words are very, very important: position size. Because all this step here, guys, step 1, step 2, and mainly step 3, where we're going to start to do here our DCAs, you need to be able to have some dry powder. If you do not have dry powder, my friend, guess what? You're going to get stuck. And when the market recover, let's say for example, okay, let me go back here. And then when the market recovered, let's say for example, you are down here. For example, let's say we already have our base cost all the way down here at roughly 50%. Okay, let's say 138, for example. You know that if the IWM go back to the all-time high, which will, just a matter of time. Don't worry about that. Doesn't matter how long it takes. 1 year, 2 years, doesn't matter. if you go back to the all-time high, because we drop our base cost all the way down here, we are going to be able to make 50-60% in a matter of 2 years. And this is where guys, Warren Buffett can make 20% a year every single year. Why? Because it is, okay, it is an average he's getting 20%. Okay, it's an average, it's the mean. Some year it might be down 5, some years it might be down 10, some years it might be up 20-30, but on average it's up 20%. How? Doing same thing what I said to you guys. Why now? Okay, and this is why I was able to capitalize on these massive gains, as you guys can see in this speech. Okay, hope you guys understood. I wish you guys all the best. Okay, don't forget, long-term invest in your mind, always, okay. Stop this nonsense guessing price direction with all those nonsense indicators, strategy that nobody make money whatsoever. Otherwise these brokers wouldn't give all these things for free. They will cost millions of dollars. The reason why you get all these indicators for free is because it's pretty much useless, to be honest. So invest with a proper risk and trade management, and always thinking long term. Okay, if you like the video, and don't forget guys, if you like the video, click below, because I will send you guys my cash secure put trading journal for you guys, which I'm gonna show the next videos anyway. Okay, but you must be a subscriber, and you must be someone that has left a comment on the video. Okay, I will appreciate. That's the only thing you can like the support the channel. Liking the video, leaving your comments. That's the only way you can support the channel. Okay, there's no other ways. Guys, all the best, stay safe, and happy investing.